Good morning, traders. Thanks for joining us this morning. This is Michael coming to you from Game Edge on Monday, September 29th, with our pre-market prep session. As always here at Game Edge, we'll start with our three pillars: sentiment, structure, and trend. Make sure you hit that like and subscribe button and sign up on X or YouTube. We'll notify you when we go live with any content. All right, let's jump right into our market trend model for today. As you've seen, we have been in a short-term downtrend. This is based on the tick index. The bolded white line is our intraday instantaneous cumulative tick. If you notice back here on the 23rd, we started losing those shorter-term momentum moving averages, what we call the railroad tracks, and we were moving to the downside and never recovered those. So to be on the right side of the market, obviously, you want to see this moving, if you're a bull, to the upside, indicating more buying in the overall market above these shorter term moving averages, as well as the colored ribbon. And if you're a bear, you want to see this continue to the downside, as that would indicate more selling versus buying in the overall market. Again, we talked about the weakness on the 23rd, and this continued to the downside on the 24th and 25th. So if you're looking for any bounce to the upside, you needed to see this bolded CT start moving above these shorter term moving averages, which did not occur. So you should have stayed at least in cash or reining in your long positions and possibly positioning for the short side. Now we're below this colored ribbon, so this is what we call a prone to failure area. So we can move back above these shorter term railroad track moving averages, but when we get to the colored ribbon, we may see another failure and a possible move back to the downside. If we recapture these colored ribbon areas and start moving to the upside and indicating that institutions are buying versus selling up here with our breadth indicator, then we'd be on the long side of the market, and we want to see this continue to the upside. So we'll watch this day over day. We saw a short-term recovery heading into the afternoon on Friday. We need to stay above these shorter-term momentum moving averages and then start moving back through the colored ribbon. Breadth indicator up here, new highs versus new lows were fairly flat. And then our plus 1,000, minus 1,000 filtered cumulative tick was on the positive side, but not to an extreme. As you've seen past here, these 3 days of selling were significantly to the downside. So we're going to need to see multiple days of this filtered cumulative tick staying above the zero and then moving up towards the 40, 50, 60, 70, 80,000 level. Indicating the institutions are coming back into the market and doing a significant amount of buying versus selling. So this is all exchanges. We'll move on to our quality tick. Again, this is how we base our mechanical portfolios as well as our wheel strategy. We posted an extensive thread this weekend about how we use our Game Edge tools to enhance the wheel strategy. So make sure you check that out on X. We've had a significant amount of feedback and questions, so make sure you check that out also. All right, so again, the ARCX or RC, this is our filtered, our quality tick. We want to see this move back above the colored ribbon. This would turn our portfolios back on, our mechanical portfolios, and we want to see it stay above the shorter term moving averages if you're a bull. So we'll continue to watch this day over day. All right, let's jump into the SPX option structure. We look at the SPX option structure. It's the most liquid and notional value. This gives us an idea of where market participants are positioning, and we separate it in the SPXA and the SPXP. We believe we're the only service that provides this content. SPXA is our cruise ships or our tankers. This is institutional positioning and larger market participants. So we definitely want to look at this. These contracts don't turn over as rapidly as you can see over here in our web app. So the next expiry is the October expiry here. NetGex is kind of weak, 2 million contracts, so we're at a teeter-totter point within the overall structure. We could move to the upside, or we could have a move to the downside. We are call dominated above and below spot price. So again, net delta is green, so this is supportive on any pullback, but we saw a little erosion of the structure below us. Again, this is out of the money put hedging versus in the money calls below us, possibly closing and then exposing these out of the money or out of the money put hedging increasing. Staying above transition will be key. We've talked about that multiple times here. Staying in a positive gamma call dominated structure above transition is always what the bulls want to see. And again, we see 6,700 up here at PGEX. That would be that first large gradient and round Livermore number that we need to get over. And as always, staying above the transition will be important. So we'll watch the structure day over day to see if it continues to stay call dominated. On any pullback, we'd be looking for supportive type action unless this structure changes drastically below the spot price. All right, let's move on to the SPXP. All expiries turned on via our web app. You can see over here. Call dominated above and below spot price. Implied open is this area right here at 66.70, 66.75. Again, staying above transition areas will be extremely important. Those should be supportive unless we start moving below the transition areas and then we get into a more negative gamma put dominated environment and structure where we could move down towards the 6600. That's our first gradient. If we get below 6600, then we'll be probably net short for a move down towards the 6550, and then ultimately 6500 is JPM short strike down here. Not anticipating us to move significantly down towards that level with this structure at the moment. But again, if this changes to put dominated and we see a significant amount of out of the money put hedging coming in, as well as out of the money call speculation starting to degrade, then could have a possibility for more weakness. So again, we'll watch this structure day over day. Peak X COI 6700. So again, that's that upside target speculation, high sensitivity peak that we'd be watching for if spot price continues to move up. All right, let's move on the SPX GEX ratio. Again, this is a put call ratio, but we add a gamma component. So it's a short dated call gamma versus short dated put gamma. I spoke about last week reaching an extreme on the 25th. Or possibly the 24th or 25th, again, when our short-dated put gamma becomes an extreme versus our short-dated call gamma, and many times we'll see an overall bounce back to the upside. Now, this can continue to the downside, but basically this is just telling you that all the speculators are on one side of the boat. It's significantly lopsided to the put side, and then usually we see some sort of monetization event where we'll see a short-term bounce in the SPXP. Now we're back above 1, which this gives an edge to the bulls. That is more towards a call-dominated structure, and we have a ascending or positive slope in the overall GEX ratio. So again, we have had a significant amount of short-dated call gamma come into the complex the past 2 days from the 26th to the 29th heading into today. So again, we'll watch this. Obviously, we want to see the same moving to the upside, SPXP. That would be spot price up, as well as gamma edge or gamma ratio or gamma edge ratio, GEX ratio to the upside, indicating short dated call speculation is again driving price to the upside. So again, we'll watch this to see if we start continuing to see this GEX ratio moving to the upside, indicating short dated call speculation. SPX GEX ratio, this is what was posted last week. We're looking for these extremes. Again, historically, when we reach this 0.5 area, this is an area where we bounce within the SPXP. And then when we reach this 2 area, 1.82 to the upside, this is an area to take notice that we could see some extremes or some frothiness in the overall price action. And many times we see a pullback happening within the overall SPXP as the short-dated put gamma is reaching an overall extreme, and same thing to the upside, the short-dated call gamma is reaching an overall extreme. So this is a great tool here at Gamage that we use to look at the overall extremes in the market and prepare for possible turning points before they get ready to happen. All right, moving on to the SPXP delta balance. This has repaired itself pretty significantly from last week, looking at the delta balance all the way down at -1. Again, that was indicating that put speculation was in full control of the overall market, but now we're seeing a bounce back to the upside via the right-hand plane as well as the left-hand plane, which is the red dotted line. Right-hand plane above spot price. This is your out of the money call speculation. This has to be moving to the upside for price appreciation. And then the delta balance, the aggregate of these two, needs to be moving back up towards the 1 level. So we've crossed back above 0, shows this is edge to the overall bulls as the short dated call gamma is ruling the overall complex. And then we see the expiries on out in time back above 0. And then we see the delta balance pegged at 1. So again, this could be a foreshadowing of price appreciation as long as this is being maintained to the upside. So you see our next expiries here on the 30th and then on out into the October 2nd. So we'll continue to watch this to stay above 0, indicating short dated call speculation is maintaining its overall move to the upside. All right, let's move on to the net stack command. This is highest sensitivity levels for today. First, we take our net delta column, in the money calls below spot price, out of the money calls above spot price. Again, this is supportive on any pullback as long as we stay above 66.70 and we have 66.75 to the upside. If we do get above 70.75, then we do have a possibility for price appreciation to the upside. Now we take our charm. If we're above 66.10, these out of the money puts will continue to be supportive. If we're above 67.40, then those will continue to be supportive also. But if we're below 67.40, then these could continue to be a headwind to the upside. So we'll watch this as we go into the open and then we can run the net stat command right after the open to get an idea of where these highest sensitivity levels are. Net gamma for above 6670, obviously we do have we're adding positive deltas to the complex. So again, price appreciation is possible, as well as 66.75. So we have in the money calls and out of the money calls. And then you look at Vanna, if we see an overall volatility drop, again, these could be these highest sensitivity areas. We don't believe Vanna is exerting much force at the moment of where spot price is going to open at. So we'll continue to watch this as we move through the SPX option structure. All right, 0DTE, this is what everybody is wanting. Call dominated above and below spot price, net GEX below 5,000. So that's that indication that we could go either way within the overall structure and complex. It's not a significant positive net GEX, indicating that the call domination is in total control. So again, this could easily, if SPX options, or sorry, SPX spot price drops and we capture some out of the money puts, or we see some put speculation to the downside, this could flip towards negative, as well as the overall gamma condition. Staying above the transition obviously is going to be a key area for today. 6670 drunken sailor range to the bottom of 6625. So our if thens for today is above 6670, 75. We could see possible price appreciation. Again, this is going to be driven by our intraday vol-m or volumetrics for our gamma edge tool. That will need to see indicating out of the money call speculation driving price to the upside. We'll need to see speculators alive and well above this 66.75, 66.80. Again, we'll need to see the volume driving higher, significantly overcoming this net OI of 2,648 contracts. Here to the downside, obviously, if we're in the overall drunken sailor range, could be a very choppy price action, specifically around this 66.55 through this 66.30 level. You see these net OIs very low here. So again, will be driven by the intraday volumetrics and market participants opening and closing contracts. Now, if we do get below transition, we'd be looking for more weakness to the bottom of DS and then down towards the 66.10, 66.05 level. If we lose the 66.10, we'll be complete net short for a move down towards 65.50, next area gradient down there. We're anticipating the structure continue to be supportive on any pullback, again, unless this changes to put dominated and we see speculation significantly to the downside. So multiple bounce points would be transition as well as the bottom of DS for a possible move back up, and then a failure at the transition levels from the underside could be a short back down towards 66.10. So again, we'll intently be watching the DS at the open. Again, a failure at top of DS could be a short to move back down towards transition, but staying above this overall drunken sailor range would indicate a significant strength in the overall market that we could lead to a price appreciation to the upside. And we see 67.40 up there at COI. Again, we don't believe that's obtainable today, but at least a move up towards 6700, which is a confluence of PGEX and COI on the all expiries. All right, let's move over to the trading view chart. Again, I've drawn the drunken sailor range as well as 0DT transition, so we can see we're holding above the drunken sailor range this morning pretty significantly there at 66.70, and then to the upside we'd be looking for 66.84, 85 is this local peak here at 82, somewhere around in there, and then above those levels obviously 6700 would be the speculation area to the upside that we'd be watching, and that's plus GEX. So we base a mechanical portfolio on P-trans and plus GEX, and historically we see monetization at the PGEX area. And then if we do drop in the drunken sailor range, we'd expect this to be extremely choppy, back and forth with some sort of price action like this, and then an overall move down towards transition. We'd anticipate this to be supportive, and then we bounce around here. If we do get below transition, then we have the bottom of drunken sailor range as well as COTMP to the overall bottom. This is where out of the money puts go in the money, and this is usually an area where we see some monetization also. So multiple areas of support to the downside that we would most likely see price bounce at, as well as the top of the overall drunken sailor range. So hopefully that helps everybody for today. I'll go back to the DS chart. You can pause your player and put these levels on your chart heading into today, or you can join us at gameedge.us. We have significant trading community that we'd be happy to help you understand the overall SPX option structure and market. Again, sign up for our newsletters. The wheel strategy is one of our newsletters. This will be delivered to you on the weekend for free. And then we have significant educational content, free courses here, GameEdge Fast Pass. This is our flagship options course that tells you everything about our methodology, how we use our tools, as well as the overall SPX option structure and how to navigate it, and then a couple other free courses here. And then always click on the pricing tab. Come join us in the Discord, 14-day free trial, all the tools turned on. Again, extensive trading community, as well as our overall GameEdge team that is in the trenches trading with you every day. And we'd like to help you get up to speed and navigate the SPX option structure and market. So let me know if anybody wants to go over any individual stocks really quick. I have about 4 or 5 minutes here. I'd be happy to click through some if anybody wants to look at the structure of individual stocks. Bill, yeah, let's take a look at Bill. Again, we'd like to filter these with a 1000 OI initial filter, and then we like to see the total OI significantly higher. So you see these overall areas of very low strike area. So we can look at this structure, but dealer control metric that we like to go by may not exert as much force. So again, we're call dominated on Bill above and below spot price, transition area a little bit wider. So that is edge to the bulls. And then we see COI up there at 60. That would be the cap on price. So weekly expiry, you see the OI here is only 2,800, so it's very low OI. So again, our dealer metrics and our option structure evaluation would not necessarily give you a great look versus Bill compared to NVIDIA, that's hundreds of thousands, or Apple or Google or some other stocks. So obviously very low exposure area, or very low OI for speculation here. But I think you get the idea. We're above transition. PGX and COI is 54 for this week. So I would not anticipate a significant move to the upside for the rest of the week unless the structure moves to the upside. So hopefully that helps you on that one. All right, any other ones anybody else wants to take a look at? Let's go ahead and look at the SPX here. So we're continuing to bounce there at 66.70. So yeah, no problem, Reese. Thanks for interacting. Again, come join us in the Discord. You can check out all the tools for yourself, including our web app. And you can get extensive education on how to use them. So if there's any other stocks like this, you can just punch them in our web app and look at the overall structure. And obviously you want to look at the structure to see if it's advancing or staying stagnant. So yep. OKLO, Tesla, sure. All right, OKLO for this week is put dominated. We are above transition area, but a significant amount of puts in the net delta column, so price appreciation is going to be likely difficult. Call dominated on the full structure. Transition is non-existent because we have a flip of the PGEX and INGEX here. So structure doesn't look conducive of moving to the upside any significant amount on OKLO at the moment. Obviously, it has had a large run to the upside, and we see PGEX 112. So I'd anticipate some stalling, probably some choppy price action in OKLO unless this changes back to call dominated. Tesla, let's go ahead and look at it. Call dominated above and below spot price. Transitions up here. PGEX COI at 500. So we're below transition at the moment. Let's look at this week's expiry. Below transition, again, so starting from a weak state, even though we're call dominated, so move to the upside may be a little bit difficult on Tesla. So we continue to watch this and see if we get above transition. But that's going to be the key area to the upside, 462. And then we have COTMP down here and a few other gradient areas to the downside. So again, Tesla's had a significant move to the upside also and below transition. So pull back in the overall market, obviously below transition. So SoFi, call dominated above and below spot price. Spot price is within the overall transition, so extremely choppy area. This week's expiry, we're within transition, so we need to get above transition, and 30 looks like to be the cap on price there at PGEX and COI, unless we see the structure move up on SoFi. PayPal, call dominated above and below spot price within the overall transition, PGEX at 70, so that would most likely be the upside area that would cap price. Within transition, so this is going to be extremely choppy, PGEX and COI the same at 70, so you don't have much upside here. 2 points basically on PayPal, so I would not anticipate that to move significantly to the upside. Hopefully that helps on that one. Let's look at crowd. Again, thanks everybody for joining us. We love the interaction. So call dominated, PGEX, COI 500. So above transition, so 500 would be the upside area I'd be looking for. Expiry this week looks like 500. So if market is participant, or if market helps with the market trend model, I could see crowd appreciating to 500, just with the speculation there. Only 20,000 no OI for Friday though, so I'd like to see this a little bit higher, but 500 to the upside looks pretty good on crowd. Again, if the market is conducive of upside movements, obviously 75% of the markets, or 75% of the stocks move with the overall market, so the market trend model needs to be a tailwind for us. Let me look at INTC. This will be the last one, and then we'll go ahead and wrap it up. Call dominated above and below spot price. 35 is PGX, 40 COI. This week's expiry, PGX COI 35, so, and COTMC is 37. So 35 would probably likelihood to the upside of probably cap price, unless we see a significant amount of out of the money call speculation come in. So, all right, thank you everybody for joining us. Again, like and subscribe, share our content. That way you'll be notified when we go live if we do a intraday market recap, which may not be happening today just because of our overall schedules for a lot of our team members. We have a couple team members traveling today, so we'll let you know if we are able to do that. So, all right, thanks everybody for joining us, and make it a great day.